Hey everybody, Day Trader Rockstar here. And we're going to do a special video today. We're going to focus most of the video on the 22 range chart. I want to really show you something really great on this and how to set it up properly and how to trade it properly. But the name of the video is going to be called Perfect Practice Makes Perfect. And I always say that on my show. Perfect practice makes perfect. It was a baseball coach of mine when I was in Little League, and I wasn't that good in Little League. I was like the guy, what was on the Bad News Bears? Lucas. I was Lucas. But that was a good field. But that's besides the point. Our coach was a real son of a bitch. I mean, he cursed. It was good old 80s, And they'd be drinking beer, bringing a cooler. But it was a real deal, and they were very competitive, and we had a good team. But we'd be practicing all the time, and all he would say is perfect. We'd go there sometimes, and he wouldn't like it. We'd practice for an hour, 2 hours, and that was awful. He wants us to continue practice, and he always said that perfect practice makes perfect. Practice doesn't make perfect. Perfect practice makes perfect. So you had to be perfect during your practice, or you had to strive to be perfect. You couldn't just go through the process, just go through the thing. This is where you improve. Anyway, I say it all the time. Name of the video that today because I want to show you some things there today that require good fundamentals and just good discipline and patience, and that's what you need as a trader. If you don't have those two things, discipline and patience, you're not going to make it. All right, you're not going to make it as a trader, as a sit down at your desk, get up in the morning, and try to make something out of the markets. The market's going to end up eating you alive, or you're going to get too emotional. You have to train your body, train your mind, and for what I do is I teach this. I teach the methodology behind how you're going to do this, and it's pretty simple. Where we could look at the bigger picture. And this is actually, I was doing a coaching session, and I was going over, the setups for the day. And I said, let's just go back this was on Friday. I said, let's just go back on the day and kind of go through. Now, this is my live chart. When the morning starts off, I start putting these trend lines in, just like this. Each tick is like a new, let me see if I can kind of move it. Yeah, right, just like that. We're always putting something in. So we have a breakdown, and we get a bounce. I'll start putting some areas in. We got another bounce. I'll start to put a new trend line in, a parallel line, and I'll wait for these things all to line up. And that's the gist of it. That's kind of a very fast synopsis of the methodology, is waiting for your trade opportunities with a confluence of indicators, and one of them, or actually the foundation indicators, stochastics, are very important. And we built a whole method out of reading stochastics in the different time frames that we could combine using stochastics and the parameters of these that match different time frames. And now we have all this work, and I get so the next thing I want to show you is just intense, because the divergence style of trading that I trade, it's you can't mess it up. You can't it either it's going to work out because the signal is going to be very obvious, and we're going to show you the signal. I'm going to show you the right signal, the perfect practice signal. All right, that's what we're talking about. Perfect practice. Practice this way. I know you're not going to perform this way in the game, but at least practice this way, and that way you gain your confidence stuff. And I'll be talking about that in a second. I'm all fired up because I just did some back testing, and not even back testing. I just did some. I just did reviews and stuff. I'm working with some different settings, some different time frames. I'm always using, right now, we always look at the 1 minute time frame. We usually trade the ES or E-mini futures, and we're looking at the 1 minute time frame. We look at the quad rotation, and these are the areas that we focus on. And this is usually a quad rotation, lower trend line. Any type of lower trend line, 1, 2, 3 patterns. When you get down to your lower trend line, we're looking. That's our trade. If we're in business, this is our product. If we're hunters, this is our game. If we're gamblers, this is our pot, right? I don't think that doesn't make sense. I was going good there for a second. that lower trend line becomes very important because it's a good risk reward trade. You buy into weakness, and we're going to see the momentum. We know how momentum works. We know how stochastics work. We know how the divergence works and how momentum is shifting internally, even though you don't see it on the stock price. You have the low and the bounce and then the lower low, but the stochastics turn back up aggressively. And that's usually a pivot area in the downward channel. That's why we're looking for channels, because we're looking for pivots. And then the pivots are going to be identified by quad rotations or divergences. Simple as that. So basically, you got to wait until, if you want to have the quad rotation divergence, basically you have to wait for the 60-minute to get down oversold. That's probably going to give you the biggest moves. As you can see on a bird's eye view here, we look back at the 60 on the bottom here. You have an oversold here, big move after it. You have an oversold here, quad here, big move after it. We have an oversold here, basically, and basically big move after. The odds are you're going to get a bigger move. Sometimes, the danger, what we correct, with the methodology to kind of save us from like a spillover sell-off. Because at one point you could be oversold on all four of them, and the market continues to drop. So we make sure that we have a 1, 2, 3 pattern, and we can only trade a quad rotation if it sets up on another indicator. So it either has to be a divergence, or has to be a lower trend line, like a channel line, because we're going to be buying the downward channel lines. This is the buy side, just a scalping way of trading. And now we could apply this to all time frames. But for our reasons, we're going to put it on, say, the 1 minute. We're going to be watching the market on the one minute, maybe the 3 minute time frame. This is our basic scenario. I teach it every day. Daytradingradio.com. We trade it. We think the truth is these are the trades we should be in. Nothing more. These are high probability trades. High probability trades, and they're easy to identify. It's the hard part is getting to each one without trading and getting chopped up in between the other times. That's up to you. That's going to be really up to you. I could try to motivate you and tell you it can be done. It absolutely can be done. So this is going to be This is going to help you. So this next section right here, we're going to look at the 22 range. Now the 22 range chart, a little bit different than the candle time chart. So the 22 range chart goes by range. Now I've done some videos on that. But basically, whatever the number is, that's ticks. And that would be, in this case for futures, it would be ticks, and that would be how many ticks in range has to go by on the price before the candle is printed. After 22 ticks in range, it goes up or down, but it has to be 22 ticks in range. A candle will be printed. If it goes another 26, fast in a couple seconds, another candle will be printed. Maybe it gets it doesn't go in a 26 range. Maybe it tightens up, and it hangs out here within a 26 range for 5-6 minutes. You won't have a candle until that 26 range is actually builds, and then it hits, and then a candle will be placed. So that's how that works, basically. There's other things, like just read it up, just Google that stuff. I'm not going to go into that whole thing on that. What I'm going to do is how divergences work magically on this, all right? Magically. And much easier to make this really good is because the 22 tick, the tick in itself is money, all right? That's money. All right, and by the way, make sure this is on here. Yeah, this is still on. By the way, this video and all the videos can be found over on the website, daytradingradio.com, and we do this every day. So next Monday, you're going to be seeing me do this thing that we're going to be talking about right now. Next Monday, in the next couple of days, I'm going to be doing a side-by-side almost a trading. I'm going to be trading off the 22 range chart next week, and I'm going to be applying these rules. And these are the rules you need to apply. And this is the perfect rules. Practice makes perfect rules. All right. Now you're going to eventually, bastardize them and change them and add your own little flair to it. That's fine. But everyone takes their own chances and learns. The old saying. um, if you want to find out, find out. The So what our rule is, and again, this is my quad rotation, and what we're doing, this is the 22 range chart. So I'm using the NinjaTrader platform to show you this, and we'll take the trades on this. But you'll have the minute charts if we were looking at the minute chart or the 5-minute chart, et cetera, et cetera, et cetera. It's just anything else. But if you go down to the range chart and you don't see range, you have to go down to your configure button here, and then go to range, and then go to add here, and then put in 22 where it says 1, the value, put in 22 and then OK it. And then next thing you know, it'll be up on your screen, and when you'll be able to pull it off of that. So then you're going to go up to your range chart, go to range and go to 22 and click on it, and then you have this chart. Now the chart looks very similar, except it's not based really on time. It's based on the range of the candle, and each candle depended on what we're trading. In this case, it's the MNQ. I should put that on there so you can see, but it's the MNQ. Let me see. No matter, I settle in with you guys here tonight. 22 range MNQ. Let's put that down. MNQ are the micro NASDAQ shares, the micro NASDAQ futures contracts. All right, and that's we usually trade that or the ES contract. So to make it kind of easier to understand, and this is where it comes. You want to know exactly what kind of numbers we're dealing with. All right. So the NASDAQ contract is, again, or the micro contracts, just like the micro ES, are 1/10 the size of the bigger ES contract, the ES Mini. So in the case of the NASDAQ here, where the NASDAQ, if you went on the NQ, the NQ minis, if that would go 1 point, that would equal $20 basically. If you had one contract on one point, it'd be $20. With the MNQ, it's 1/10, so it's going to be $2, a whopping $2 per point. So, and we look at that and we say, all right, how many points, how many ticks do we have, and then you can kind of feel out that you're going about 5.5 points is what the range is. The 22 ticks is about 5.5 points, which sounds like a lot, but not really on the ES, and I shouldn't say not really on the MNQ. It is kind of stretching it on the ES for this type of trading, unless you're going a bigger time frame. But I have some good results that I'm going to show you in a bit that kind of blew that out of the water, And I said, wow, those. And the market has been more, giving us better ranges, so it's actually better for us. All right. So that's how we get our chart up there, and we're going to just apply the same rule. So we have our 4 stochastic bands, 9, 3, 14, 3, 44, and 60, 10. Now I have the templates. The templates are over on the in the dashboard on the playbook section of the site. You can get this template. So if you need that template, it's already over there. The other thing. All right. So basically, when you have that template, make that bottom line here. This is the important part. This is our practice makes perfect. Make the 20 line here. Usually it's blue or whatever it is. Make it yellow so you can really see the contrast in it. On the 9-3, you could do it on the 14. You could do it on all of them, but especially on the 9-3. Now we're going to really be paying attention to 9-3 and the 14-3 and some of the 60-10s too. And just like regular signals, a quad rotation will be paid attention to here when all 4 stochastics are underneath the level. So it'll be amazing to see, the results on these. All right, but the real thing I wanted to talk about is what is our criteria? What is our perfect criteria? So we cannot call this. So we're just going to go back and we're going to just eyeball all these setups. But this is going to be the setup. First of all, the divergence we're looking for is always going to be in this downward channel. And a downward channel doesn't have to be a work of art. We're just going to, lots of times the market overshoots its area and then comes back in and retests it. That's where we want to put our trend lines. Once we start establishing more than 1 or 2, 3 pivots and we get down to 4 or 5, you start paying attention down here, especially if you're oversold on a quad rotation. You look for that bounce, and if the price fails and comes back down and the stochastics don't bounce, but the key here is, this is how perfect we have to do it. That bounce, the problem is this was kind of a dual, this is almost like what we call running divergence. There was a little higher low here, right on that yellow line, and it kind of went up, and then it came back down and took out the lows. And then it went higher here, and then it took off. To not get shaken out of here, not to get, because that stings. Even though running divergences are great, if you can have a running divergence, you have to take a running divergence every single time, and I'll explain why in a bit. So you have that channel line. Once we get down here, we know our environment. This is our environment that we're searching for our trade. We have a trend line. So what I'm usually announcing, I said, all right, we have a quad rotation and a trend line. Typically, this is a good level. But I also say this is also part 1 of a super signal if we're looking at time chart. But we're looking at the range chart, so who knows? Let's see what happens. And what happened is we kind of got a little move up, started moving back up a little, and then we kind of came down quickly and then reversed. And that reversal turned that back up. And we want to make sure that we're only going to count the divergences that are above the yellow line. They cannot be touching the yellow line. They cannot come back and touch it or go underneath it and make that higher high. Now you can in the future do that and say, all right, my rule is going to be just an angle, or not more than a 10-degree angle, or just a visual divergence. I want you, for perfect practice time, to make sure that the first low has to be under the 20 line, the little bounce happens, and then the lower low has to be above the 20 line. So that lower price has to be up with the stochastics have to be turning back up. That is your entry, all right? Now, remember, this is your entry, right when you start to turn back up. In this case, you have the quad rotation too. So that should give you even a better understanding of that. And this is not your average channel buy, but what we're doing here is we're going to we're just going to mark these down, and then we're going to get to the next portion of this, is where we take profits, or how do we take, so why do we take profits? What is the 22 range going to give us? So you want to buy on the turn. Now because this is a 22 range chart, not a time chart. All right, it's a little bit more interesting, because you're going to be able to see that you have a range and you have to get above it. And once you start getting above it, it'll be easy enough to see everything, and that's that triggered. It's going to be a higher high on a range chart. So you want that turn up, but you also want the higher high. You also want to be inside the channel. It's always better to be inside the channel. In this case, we're going to look for, if you could get in, and this is, again, this is on the NQ. This is way after. So you could see this one here. You should be in here, about 19,818. Anywhere in this area. It's way after the turn back up. You should be in it here. Very easy to put your stop right here. It's not even a bad stop on this. And then the stop has to go at the lows. And there it went. It exploded higher. Now each one of these candles is, who did I say that was? What are we at? 22 takes 5.5 points. So 5.5 points, 5.5, 5.5, 20, 25 points. That's a 25 point move out of this. 25 points. That's a hell of a lot of ticks. Let's see. So we get that. So what we're going to want to do is still you have your 9-3 stochastic here. I love the rotation trade on the 9-3. You hold on to that, and you hold on to it until it gets up into the 80s and starts turning back down. Or just eyeball it. Let it get through it, and you should be close to selling, basically. Let's go back now. So I just want to make sure that this is clear. All this is nothing. And this is while we're watching the 1 minute time frame. So I'm going to have that 1 minute time frame. I'm looking for my divergences. But I'm also looking for confirmation divergences only on the 22 chart, and they have to be set up exactly the way I want it. You have to have the divergence. That means you have to have a low, lower low, or double bottom, and a higher rotation. Now, I went through these a little bit before just to circle them so we could save some time. But as you can see, if you in the divergence, this is a little bit more advanced, but a divergence needs to take out the lows here. There's going to be cases that more advanced features of the system, excuse me, more advanced features of the system, where we talk about, it's like when you get your brown belt, your black belt material here, when you get down to a flush candle, and these are called canceling candles, you'll start to see more and more divergences based off of how the algorithms come and take you out of a trade and then go back up and then come, and then you have this high rotation, which is really a key, that's a key divergence right there. But you can't tell it right now because of this, and it looks out of whack. But you'll see these, we call them canceling candles. That was a quad too. Either way. Not to say that you're going to take that. No, you're not going to take that. It's too hard to see. All right? And I'm going back, and I'm saying, all right, upward channel down. We're not looking at low. I'm not looking at shorts here, but if we were, this is a textbook short up here. I'm just looking up there. It fits the criteria. First high is above the 80. Second high is underneath the 80 with the higher high. Very easy. Right when it turns down, you're in. Now, that's not going to be the great thing about this is usually going to just take one candle. You're going to get that in that one candle. Now we can see after that one candle turn up, you tend to get one or two candles more, right? One or two candles more. That's part of the theme of this. We're going to come back to that. Now this, you might say, oh man, this is divergence. This is a low. This is a higher low. Yeah, but again, we're being perfect in our criteria right now because we just want to prove a point. I want to prove something. All right, so I'm going back here, and I'm looking. All right, nothing here. This is all slop. Even this right here, not taking it. Only thing that qualifies here is a double bottom. All right, so we'll take this. It was a bounce. If you had that bounce here, it went up, it came back down, double bottom, higher rotation there. All right, I think you should be able to see that. It's confirmation on the 14.3, but it's under the 20 on the 14.3, but we're not counting that. But we do count it. It is a divergence, but we're only counting above the 9.3. I mean, above the 20 line only on our 9.3. Either way, stop goes in at the lows, and it's off. You do it. All right. So here's one actually. That may be all right. So this is actually one which was a running divergence. Now I would actually, and maybe did. I don't remember at this point. But I would say this was a qualifying divergence right here, right? You have a low right here, and then you have that lower low. And it starts to turn back up. Now, you don't go, it gets a little, it goes, remember, this is a 22 range chart. So at this point, we're pretty much, you're turning up. I don't know if you can get in before that candle, but at that point, you're pretty much at the highs there before it starts turning over. And what happens is it comes down, and now just pay attention to this. This is, you have to do this. You have to treat the method the way it should. It's not going to be flawless. It's going to be close to flawless, but it's not going to be flawless. So for whatever reason you took this divergence, I think it would have been a good divergence. You put your stop and tick underneath there. It should work out fine. If it doesn't, it comes back down, and it takes you out. When that happens, and then turns back up. And puts in and still has a higher high than the first divergence low. So this is our 1, 2, 3 drives to the bottom, a George Lane methodology. The So this is a fantastic setup. It's what we call a running divergence. It's actually that's okay to be caught in that. That's like, all right, you got me, but you also gave me a better signal here. You gave me a better signal when you got me once. You're not going to get me twice. This is also called the second rat gets the cheese. The first one is the trap catches you, then it bounces and comes back. Or here, you get in here because it's a divergence. You think you're a hero. It's starting to break. It comes back, takes you out, catches you, then puts in a new divergence, and that's the divergence that really runs. Now, it did come back down underneath this before, but we're not that type of traders. We're not sticking around here. We're actually focused on, and that's a good question. Well, we're going to come up to this. We're focused on two candles. Two candles, and why can we say two candles? Because we know what those candles range are. We know that if we get 2 or 3 candles in our direction, we already know what that means in the price. 22 ticks, 5.5 points. 2 candles, 11 points. 11 points. So that's what we're looking for out of these. Now, this is a nice rally. I'm not looking at anything up here. What I'm going here is I'm trying to show you the 9 threes. Again, this right here, you can't take this. This low and this low is underneath the yellow line. Let's not take that. Let's stick to the original reason, the strictest of strict. And so we have a higher low and a lower low right there. It actually was a good thing to stay out of that because it was kind of a little choppy bottom there. But that was a clear divergence here. And that, of course, was one of the biggest moves of the day. Now, each one of these could have a quad rotation setting up with it. So if you have a divergence on this and you have a quad, the chances are of a bigger move is going to happen. All right, so that's actually it's a running divergence, just about a runner. You see that high, that lower high, you wouldn't get in because it's under the yellow, and then a higher high. That's a running divergence with a quad rotation. You have to take the running divergence on the second one. If you got in there and you got stopped out and you see it again, don't get gun shy. Get back on that horse. That is the best trade usually of the day. It's the algorithms that know that, and they say, all right, we got to clean this. We're going to give it a good run, but we have to make sure we get everyone. So we'll shake them here. We'll suck them in. We'll come back at them one more time, and then we'll go off the races. And that's how it goes. All right. So here we had a interesting kind of just a double bottom here. We got very close to it was a double bottom, the candles, but a much higher rotation. All right, and now you had one here too. Actually, I didn't even mark this one down. You had one here also. Actually, that might have been another running divergence. That was kind of a little divergence. This one came down, met that, and then moved higher. So it was kind of a series of higher lows again. This really stood out either way. I don't know if it took out the lows, so I think he would have been close. Again, the move here is 5.5 points, 5.5 points, a little bit higher. Well, no, wait, am I in the 22 range? Yes, I am. Oh, I have it zoomed out. It looks smaller. They look really small, but that's a good 3-candle move, 4-candle move. And when we think about that on the price levels, that's still not a bad thing. But this is the really good one. And again, 5 points, 5, 10 points, 15, 20, 25, basically. We're looking to get 10 points out of these, all right? You're looking to take these with 3 contracts and get 10 points. Maybe take a little bit, just try this. Try this out. You could try to manage your exits if you want. Take 2 off up there, maybe keep 1 running. But the market is amazing, and it'll come back and get you most of the time. So my advice, get the setup, take the shot, get out, wait for the next setup, take the shot, give it time, put your stop in. Don't move your stop. If you get a runner, close your eyes, take a walk around the block. All right? These will give you something. All of these will give you something. It hasn't not give you anything. Maybe this one probably might have came back down, but it gave us a divergence. And if a running divergence is one of the more powerful moves. They're very explosive in nature. Now this doesn't look like a lot, but remember each candle is 5.5 points. So don't think of it as candle. Don't think of it as like, over here. It's just that's a lot. That's a big move to be able to telegraph that. This is a big move to be able to telegraph this. This is a big move back here. Look at this one. This is golden right here. That's golden, right? Everything's under here, the low. Now this is also, don't get tricked by this. We actually had you might say, this is very kind of important. And I teach this a lot, the reversal candle. But you really got to be, you have to be really one with the market at some times. You got to really be focused to be able to recognize a reversal candle while it's happening live. It's not the easiest thing to recognize. Eventually, I think you will be able to do it because you're going to be focused on certain things. All this other crap it's when you get that quad rotation, and then you can start sniffing around the market and say, all right, now we have a near low, we have a channel line. I want to start looking for my divergence. This is when I see this. That turn back up right there and that little reversal. I'm in because I can see that's relative divergence. Or that's a canceling candle. That's when I'll notice, there's a canceling candle. Meaning that cancels itself out. It's just a double bottom, but a much higher rotation. And it was off to the races. Pretty easy to spot. Not that bad. This one, very easy to spot. Nice pullback, fast little dip, fast little rip. But you have to take them all. You don't. That's what I'm trying to point out. We've only marked off the ones that are almost. And in this case, you're like, wow, that didn't go too far. Yeah, no, it didn't. But it went. You should have been able to get in on a second candle right here. That's way past the turn. The turn happened the candle before, a reversal candle. And then it went up another 10 points afterwards. Remember, our exit scenario, when all else fails, you pay attention to that 9-3 stochastic rotation. Once it gets up here, the odds are, look at that line, right up there. They're going to turn over. Odds are you're up here, you're going to get some pullback. You're up here, you're going to get some pullback. You're up here. Up here a little bit further, and then you're gonna get some pullback. Remember, that's the time frame we're trading in. So let's not try to be a hero and try to hold for a great range. Be a sniper. Take the trade down. Take the trade. Put your stop in here. Get a little move. Maybe move your stop up to break even. Take one for the team. Some of these are a little bit harder to recognize. But that's what we do the homework with. This is important to kind of recognize these and maybe set them up together. That way, if you see something and you come to me and says, wasn't this one? Now, here's one that we call a 14-3 divergence, which is stronger than the 9-3 divergence. You see how the 9-3 is underneath this 20 line, but the 14-3 is above the 20 line, or right on it in this case. Whenever we see a drastic change in that 14-3 and the 9-3, or we have a higher divergence, on the 14-3, I tend to see the markets move off of that signal. And it's just a signal that I keep an eye on. So this, I circled it because if we have perfect practice, we're not taking this, right? Even though it kind of, no, we're not taking that. There's no reason. And I'm not even taking this, and I'm not taking this crap, and I'm taking this. Obvious. Double bottom, high rotation. Here, lower low, high rotation. Now, maybe you didn't get enough profit on this. I don't know. I think you will. I think you're going to be able to get something. Now, if you find that all of these give you 5 points, it's very easy to just take 10, you could just take a contract on that, or a bigger contract, mini contracts, or take more contracts. If you're seeing you're getting 2, 3, 4 on average, 2, 3, that's the minimum. Candles, that's going to be 10, 15 points. That's 22 range, another 22 range, another 22 range. It hasn't failed yet. Maybe here, maybe this doesn't get it. I mean, it had 22 range, 20. That's 10 points right there. Might be hard to get in that fast enough. But I tell you, once you see that turn back up and it's a Nike turn, I think you can get in that. I think if we're focused on this time frame, if we're focused on it, we could take these. And, it might take a lot of brain power, not brain power, but concentration in the beginning, But if you start to like here, this keeps us out of trouble. You might say, oh, I just got ran over. There was a little divergence here. No, it wasn't. It wasn't a divergence until that higher low is above the 20. Now it's a divergence, and that saved you pain because this is a lower low here. So this is actually a great divergence here. That's easy. That's pretty easy to spot. Anything lower, and anything higher above above the yellow line. That's your trigger. That is your trigger. Keep one chart on this. I mean, if you're going to be successful, I would go out Best Buy and get a nice monitor. You can put two big charts on it. Put your 1 minute time frame, and then put your other time frames on it. Now, I've gone back and back and back and now this kind of a interesting one. It had that reversal candle. It had that cancel candle. I do cancel candles mostly in my time and price, but this has been always kind of interesting, because we have this kind of a divergence. But then I looked down at the 14.3 and it was a much higher turn back up. I can't say if I would have got, I'm talking, we want to see space between that. It's an obvious divergence, but this was not obvious. Now I'm going to have to pass on saying that we would have gotten in on that. I think that would have been too hard to see. I want more easy. I want the easy stuff. So there's something here, but no, that's not even, I don't see the lows. We're just looking, this is the environment, this is the downward trend lines. Once you start getting down off of a trend line like this, and we hit it and we hit it and hit it, we start to look for those divergences like here. But this is under the 20th. Obvious divergence, but underneath the line. We're looking for perfect setups, just to qualify it and quantify how good they are. And here's one. That's qualification there. Oh, actually, this might be one too here. It's getting a little choppy here. It's 10 o'clock in the morning. That's one too right here. And that didn't really go anywhere. So I would have to say that one failed. Actually, I would have to say that failed. 10 o'clock, 10:01. Very, and then it came down again, put in a better divergence here. That one just ripped then. That was right after the close. Now, let's take a look at that 10:02. 10:02. I want to take a look at the chart at that point. 10:02. Let me see if I can find that. Oh, yeah. So, is that it? There was nothing there on that. What we're concentrating on is watching a 1 minute time frame. This is where we tie it all together. Side by side. You're watching the 1 minute time frame. You're seeing the setup. You have your let's see here. Let's take a look here where we had a quad rotation here. And this was at 12 o'clock, that big spike down. That was a good divergence right there. That was 12 o'clock, 11:30 to 12 o'clock. Let's just take a look at that for a second. 11:30, this is on the MES. I should put it on the ES. Let me go back here, 11:30, 12 o'clock. And what I try to do is just kind of, 11:30. You start to see that same setup. If you're starting to see the setup here, this is right at 11:30, and it gives you a divergence. In this case, it was that 14.3 divergence, and you have another divergence, the other time frame. That all lines up. That is something that we are looking for. Now I ran this on the ES too. I ran this on the ES, and I actually got, I think, even better results on the ES here. Hopefully it's gonna load my circles. I have my circles here. Maybe they don't. We're gonna have to go back and do art. All right. So here's one. Right here's. Now you could probably even go again. Running divergence is super powerful. First one gets you. If you grab that right there, and again, range chart, you might 1, 2, 3, 4. What is this? 22 range. All right. So remember, this is the 22 range. 22 range on the ES. Now that's kind of there might be more time, less candles on this. This is it. But I found out it actually gave pretty good signals. It actually gave good signals here. So you had a much bigger divergence there. This was kind of sloppy. It did give you a little range bound trade. 22. 20. That's pretty good on the ES and the MES. That's 5 points. That's 50 points on the ES contract, a point. All right, 50, and then it was $5 for the micro contract. So we're still dealing with 22 range. So 5.5 points. The 25. So it'll be 250 on the ES. I guess 25 on the with one contract. 2 contracts would be nice. So 2 contracts on the MES, I think would be 50. The MNQ. Right. All right. So anyway, I wanted to go back and just kind of go through these really fast. Nothing. Again, we're looking for a needle. Do we call it a needle in a haystack? Are these counting? No. Perfect practice, right? Came down to the line there. We're waiting for it. No, that's underneath. We can see it underneath. No. Nothing there. Nothing. Is this one? Maybe here. I would call this one. All right, and that's a pretty good move. And again, you'd start to turn back up just on that. I don't think you're dealing with anything past this candle. Like, you're in on that candle. Now that's a 5-point move, and then the range here chopped around and stayed in that range for a while. But that is a that's, where does that go from? 71 to 75. About all the way down here, 69 to 75, all the way down there. But if you get in a little bit lower, 5 points. Chops around a bit. It went up a little further after that. But what this is going to do is really keep you focused on what you're looking for. You can take some notes and stuff, and you can do it on both sides, the longs and the shorts. I didn't really see too many here on the ES. Not too many on the ES really popping here in front of me. The upside was very kind of strong here. This is where you would see them. This was very close. I mean, actually, remember we talked about that 14.3. If that 14.3 gave us the divergence, we would take it over to 9.3. And that is a divergence. That's a nice double bottom divergence right there with a 14.3. Now, I've considered just using 14.3 by itself, but you get more setups on the 9.3. It might not be as quality. That's really, let's see if we see anything that we missed here. Oh, yeah, right, like kind of right here. You can see the 14.3. This came down to the 9.3. This is showing a lot of these are kind of the same thing on the 14.3, much higher than the 9.3. We'll call that a closing price divergence. And we'll call that 5, 10, 15, 20-point move on the ES over that time after that. A nice turn up. hung around. Remember, your lows are going to go down here, so usually your low is going to be the same as your, basically, it's going to be your, oh, that's a good way of actually putting it. You can put your parameters in on your 22 tick as a stop. Yeah, you can put 22 ticks as your stop. All right, let's go. Let's see. That was a nice one right there, and that was it. All right, that was all she wrote on that. Let's, while we're at it, 1, 2. Got a lot more setups on the possible 3. I could probably go out further, but I wanted to run this on the YM fast for you. I don't know if I still have it. Oh, you know why? We just had options expiration. That's why I don't have the old stuff. It stops. There's one right here. Very, again, the pullback here. You know, we're starting to look. 22 range, everything gives us channels. And once we, even if it's a narrow channel, I'll accept a narrow channel. I'll just say, all right, that's what I have that. The top is always, once we break down from a channel, like this, it was a channel, and we just broke down from it. Sometimes we'll pop out of it before reversing, and we break down to it. That is always our first pivot. The top of the channel of that just broke down is the first pivot. And you can see we kind of rode through here, and then we kind of had a nice bounce here. So I put we're looking at that as the potential. But once we drove down here, we extended that down, and we had 1 pivot, 2 pivots. We parallel line, and then we drop it to this one because this was in between those two. All right, so we drop it there, and we just hold it, and we keep it there. And when we get down to that level, we start to get the oversold level. The oversold levels are quad rotation on all 4 spans, but we look for the divergence. And we actually have, I would consider this one above it because I could actually see a little, at one point. I want a quad rotation divergence. And it has such a nice pretty move behind it. Here is, ooh, look at this. This is ideal. This is a channel. This is a nice flag. When you have a divergence in a flag, it's probably the most powerful move out of there. Now these are little flags. We could measure those also with our 9-3 and our 60-10. The 60-10 going up and the 9-3 coming down means that you have a pullback flag in a bigger trend. So we look for that, especially if it's embedded. And this is what we look. But if you have a pullback and you have a low, you have you have a pivot here, you have that little bounce here, so it's easy enough. And now you're waiting down here. And now you have that low, and you have a lower low, and look at what just happened here. If you ever get a turn up or a stochastic rotation like this, a high rotation, that is a big divergence here. So you should be in on this candle right before the breakout. Maybe you have a minute. Maybe it goes fast. You gotta be watching this. Either way, that's 5, 10, 15, 20 point move off of that. So when you get to, look at this divergence here, right? That was a beautiful divergence. Huge move. Divergence here. Huge move. What's over here? Oh, what is this? On the YM? See, you got to always move. And if you're experimenting out there with charts, there might have been actually a little runner there. Even if you did take that and that pushed back higher here, you jump all over this with a stop right at the lows. That's a high level divergence. Nice space there, just right above that yellow line. I want to have that space there. I really do. But you can see, I could see if we zoom in. Now this one, this is the one I was, that one could have actually been also. I mean, you did get a little one pop and then it came back down. And you got to take that. You got to take that. You got to put your stop in. If you did take this and you got faked out on that and it popped and then it rotated back down and put on a higher divergence, you could double down on that second mouse trade. Here's here's a qualifying one right here. And you have a downward channel. Um, you're kind of working this downward channel here somehow. I'll just put these in here just like this. Um, we, we came down again. Then we turned up and then put in a double bottom there, and there was a higher rotation. Wasn't such a high on the 14.3, but a 9.3 rotation. Went up about 10 points. Turn, you would have to say you got in there, so you'd probably only get 5 points on that if you catch the top. So maybe you're dealing with 3 points. Well, that's actually, oh, that's right. This is the 22 range on the YM. So this is really, probably really tight. You could probably, well, actually, no. I just leave it as it is because it is giving you these little bounces. That's fine. You just have to adjust it on the run, you know. Flags come out, the divergence in the flags are very obvious. If we could just be in front of our screens, having the 22 range, maybe the YM range, the 1 minute time frame, so I'm going to be putting I'll probably doing the NQ. Oh, actually, I want to do the MES because I actually was liking the setups here. Steep setups, good, nice movement. Wouldn't mind managing them myself. And then taking these, and strictly taking them. Taking each one, putting a stop in. Taking it and putting a stop in. Taking it here, putting a stop in. I'll have a more detailed business, we call a cheat sheet out for this. It'll be in your playbook section on the website. I'm also thinking of putting out the, and I'll take your suggestions on this on the Future Trade Alert Network to talk more about the 22 range alert. Like if there is a 22 range divergence, should I send that out on the Future Trade Alert Network? Just because it's working really good. All right. Now those circles there. So that's it. I want to get that out, show you some things. Looking for about 2 candles at each of the divergences. 2 candles. Now, different, like the ES is going to give you a lot more, probably, because they're bigger. It's a little bit heavier. $50 a point, or the 5 on the MES. NQ. It'll be 20 and 2. And again, the divergence, very important. Give yourself enough real estate. And I would say the last thing to remember is that 9-3 rotation. If you have your trade and you're following it up and say, I got a little point, and you find yourself over that 80 line or approaching 80, your time is probably, you could see this one. You could see up, down, up, down, up, down. You just happen to maybe catch it, and you have a couple, maybe you have a candle or two before it goes back down. So recognize the environment you're in. If you're in a bigger setup, maybe there's a big divergence. But this is, what time was that? 1 o'clock, 1:44? This is the 22 range. We also want to have these things lining up with our ES, with our 1 minute time frame. So let's just, all right, so this was, this was a really good one, 6:36. Let me see if I can go to the time frames here fast. I'm going to get this video out. I wonder if it's called 6:36 all the way back here. That was back here. Yeah, right here. There was 6:36 was a nice quad, nice quad rotation. Yeah, you can't deny the quad, but the quad has to have something with it. It has to have a trend line. It has to have a divergence. Give yourself a little something. This was a runner. This was a big running divergence tonight. It was crazy. It's like the markets are Get in smart. And you know it's good. I like the range bar because we're getting a couple, three, maybe even more bars on this. Um, if you do get the setup and you get your next candle in your entry, you're almost always guaranteed another bar. You know, so if it was the MES, you're looking at five. You're looking per contract. If you're looking at another bar, 4 to 5 points. You kind of plan your trade that way. There's not many that give you at least one candle. That's what I wanted to kind of get across today. There's I think I can go back out here. Let me see if I can go out on the. What am I on here? MES? Oh, yeah, that's the MES. I have to remind myself to do the MES, though. What if I could go back here? Oh, that's messed up. It's cut in half. That was the options expiration. All right. All right, so that's it. We're back on the 629. We'll be focused on this next week. I will add it to the Futures Trade Alert Network. It comes with your memberships at daytradingradio.com, or you can get it at patreon.com/daytradingradio. Have a good weekend, everyone. I'm going to put out the stock watch list tomorrow, probably in the evening, and we'll go from there. Have a good weekend.